In business, October's non-oil domestic exports declined by 4.6% on year, dragged mainly by non-electronic shipments. The numbers coming in below market expectations following the 0.9% increase in September. Exports have shown volatility this year. They rebounded from mid-year declines to peak in July and August before easing in September and dropping again in October. Fluctuations also in key sectors such as electronics and pharmaceutical exports. Electronics showed steady growth in January before dipping in March and June and then peaking in August. Electronic exports jumped 2.6% on year last month, while non-electronic exports fell 6.7%, mainly due to lower shipments in the pharmaceutical and specialised machinery sectors. Singapore has placed its full-year exports outlook at a range of 4 to 5%, and one analyst believes it is still on track to meet its target.
I think the expectation was for relatively modest NODX growth this year. And I think even if we don't meet this year's growth target, I think the whole economy is still very much supported by the services sector. The manufacturing sector stays relatively volatile due to the fact that certain products are experiencing healthy demand, but I think we are seeing some volatility in others.
Now, to help us understand what this data means for the Singapore economy, I'm now joined by Sumit Agarwal, Professor of Finance, Real Estate and Economics at the NUS Business School. Professor Agarwal, welcome to the program. For a start, tell us why these latest NODX figures are a concern.
I mean, to me, this is concerning. Typically, what happens is there is a forecast and then there is what we see in the data. And typically, there is a difference within the forecast and the data of 1 or 2%. Here, the forecast was around 4% positive growth. And what we actually saw is around a 4.5% negative growth. So we are not just off by the magnitude, we are off by the sign. The sign was the opposite. And so there's a shift of around 8%, which is quite a significant difference in what we thought would happen to the exports versus what really happened with the exports.
So apart from non-electronic shipments, Professor Agarwal, can you outline some of the other factors that could have been behind this drop?
I mean, what we saw is there was a shift in the region. So one of the biggest exporters for Singapore is China. And we saw a drop in exports to China, not only for electronics, but also for pharma and other sectors. And that tells you something that what may be happening in China. Maybe there is a softer economic growth, what the numbers show in China, and hence they're actually reducing demand for goods and services. Secondly, could be that the export that China does and uses input from various sectors is also softening. So there are two effects. There is that China internal demand is low and the China's exports are low, and that is being reflected in their economy, and that is being affecting Singapore. Moreover, what we saw, the positive side is that Singapore did very well with Malaysia and some other countries in the region. So I think we need to think about not just the sectors, which is electronic versus non-electronic sectors like pharma and machinery, but also where the growth is in the region and how Singapore needs to maybe shift their strategy.
And so hopes of private sector economists dashed after anticipating a 4% year-on-year growth. What's your view? Will Singapore miss its export forecast for the whole year?
I mean, clearly it will, because look, if for it to make it up in the next couple of months, November and December data, the growth or the export growth would have to be 10 to 12%, which sounds quite difficult to meet. So I think there are headwinds, clearly China, US, the trade sanctions, many other factors happening, geopolitical wars in the Middle East, in Russia. So there are lots of things around the world that can be affecting Singapore's economic growth. So I don't think we should be focused on what is happening. Will we meet the target? We should think in the long term to the medium term.
And what will be the implications if Singapore does miss its export target? What are some of the repercussions that we can expect to see?
I mean, clearly, we could think a little bit in the short term. Will this affect employment? Will this affect GDP growth overall? I mean, look, missing a number by 3 to 4% is not going to have that big of an impact on the GDP or the employment data, but it will. I mean, on the margin, everything matters. So we will see some effect of this both on the big GDP number and the smaller, maybe the employment numbers will reflect that at the year end.
So jobs will mainly be affected. Going into the new year, Professor, given ongoing geopolitical tensions and Donald Trump's re-election, is this a sign that it will be a tougher year ahead for Singapore exports?
Yes, I mean, Donald Trump has been very clear. He has been talking about tariffs. He's been talking about various measures that he is planning to take that will have an impact on Singapore. Secondly, what is China going through with a softer economic growth in China? That will also have an effect. But the way we can think about this is that, look, exports of Singapore to other countries actually did go up. So potentially what Singapore needs to look at is where can we think about the exports to be higher? Maybe Vietnam, maybe Indonesia, maybe India. These are the countries that are growing at very high levels right now, and they will continue to grow. Even though, the purchasing power in these countries is not as high as China, but still that means there is more volume to be exported to a lot of the other developing countries to make up for the loss that Singapore may face both in the US market and potentially the Chinese market.
All right. Always grateful for your insights. Professor Sumit Agarwal from the NUS Business School there.